I can tell you that yesterday was probably one of the most challenging days media investors have ever had. Literally, you had every stock basically down 10%. I think the media, the average media investor, and probably even the average U.S. consumer knew that there was some vulnerability to the cable bundle, you know, to the evolution of the media space.
We talk about it here every day.
I think when it hits the global portfolio manager, that wow, even Disney, which is really thought of as more of a consumer product, even ESPN is vulnerable. You think, well, if the gold standard is vulnerable, maybe everybody else is vulnerable. If you look at what's on Netflix, it's largely being produced by all these companies that just got annihilated yesterday. So they must play a pretty important role in the ecosystem. And the concerns are not I don't think we've done a lot of work. I mean, a lot of serious work on this topic. And I think these are really marginal shifts, right, in consumer behaviors that we're seeing in the numbers. It's not a landslide of cord cutting that's going on.
But it's glacial.
Depends on your horizon. Right now, I think they are cheap. And there's a lot of pressure that's going to keep oil prices low. But eventually, that price will rise. But here's the problem, is Saudi Arabia and other OPEC nations basically are playing a game of chicken with shale players. But they've had a disastrous outcome, which is the surprising news that shale players actually got really, really efficient. And they've been pushing their energy costs or their production costs down. And that's pushing the break-even price for oil down. Now, that was not an outcome they expected. They expected to get them out of the market and to have oil price come back up and they can make more money. But in fact, they have actually ended up pushing eventual break-even lower than it should be. So I would say, actually, that the outcome for oil at this point is not as rosy as it could have been after we got out of the supply glut. But we still have a massive supply glut, Brian, and that's not going away for a little time.
Okay. Well, I think everybody's going to be watching it because we're all trying to figure out what the Fed is going to do in September. And some of the data that's been coming out is a little weak. So some people are concerned that the report is going to be weak and that the Fed will be on hold. In fact, the bond market, we actually have seen yields come down. In fact, technically on the 10-year, we almost broke down, but we've actually held. So I think tomorrow is going to be a very important day. And what I'm just starting to hear is that people are concerned that there might be a government shutdown in September. And if we start seeing that, yeah, I know. So if we start seeing that in September, that could even weigh on the Fed.
I think the Fed's getting closer. They haven't made any decisions yet, and I think it's going to be data dependent. But I think most likely they're going to start this process later this year. I agree. Tomorrow's report is going to be very important to inform that judgment. I don't know that it'll be decisive necessarily. My own hunch is that they do start moving in September, but it's a close call. But I'm more confident even that they will start before the end of the year.